You know that feeling, just drowning in financial news, data everywhere. It's a lot.
Totally. Like a tidal wave sometimes.
Exactly. So today we're like throwing you a life raft. Consider this your shortcut to what really matters from all that noise.
That's the plan. We've waded through the dense reports from Anand Rathi Wealth Ltd, their latest results.
Yep, the full year, FY25, ending March 31st, 2025. And we're also looking at their Q4, the last quarter, ending the same date.
And Anand Rathi Wealth, for those maybe less familiar, they're a big name in wealth management, focus on high and ultra-high net worth clients.
Their whole thing is private wealth. Uncomplicated, that's their tagline.
Right. Simple, direct.
So our mission today, simple too. Boil down the key stuff from these reports. Make it clear, quick, relevant for you, the listener.
Get you the insights without the headache, basically.
Okay, let's jump in. The big picture, what's the main story here?
Overall, very strong performance for FY25. Really robust growth across the board.
Okay, like what? Give me the headlines.
Well, consolidated profit after tax, or PAT, hit 301 crores. That's up 33% from the year before.
33%. Okay, that's significant. And revenue.
Revenue also climbed nicely, up 30% year on year, landing at 981 crores.
Solid numbers. What about assets under management? AUM, that's always a key one for wealth managers.
Huge growth there, too. AUM jumped 30% compared to last year, reached 77,103 crores by the end of March 2025.
Wow, 77,000 crores. And wasn't the market relatively flat, or at least not up 30%?
Exactly, that's a key point. Their AUM growth significantly outpaced the Nifty index, which was only up around, 5% over the same period?
Yeah, about that. So they're not just riding a market wave. They're actively pulling in assets or getting great returns, or both.
Suggests something strong in their strategy, right? Client acquisition, investment performance, maybe a mix.
And this isn't just a one-off good year, is it? I remember seeing something about consistency.
Correct. The CEO made a point about this. Consistent PT growth, profit after tax growth, between 20 and 25% year on year.
For how long?
For the last 14 quarters straight. Basically ever since they listed back in December 2021.
14 quarters of 20-25% growth. That's impressive consistency in finance.
Yeah, and apparently, according to the CEO, they're one of only 6 companies in the top 1,000 listed firms to hit that kind of consistent growth level.
Only 6. Wow. Okay. So what's their secret sauce then, did they say?
They put it down to structure, discipline, and data-led thinking. So a very methodical approach, it sounds like.
Makes sense. Consistency like that usually means a solid process underneath. Okay, what about the most recent quarter? Q4 FY25. Did the momentum keep up?
It did, yeah. Total revenue in Q4 was up 22% compared to Q4 the previous year.
Okay, and profit?
PAT for the quarter also saw strong growth, up 30% year on year.
And they mentioned something about inflows being strong even though market sentiment wasn't great.
Yes. They reported their highest ever quarterly net inflows in Q4, despite, as they put it, a challenging market environment.
Highest ever inflows in a tough quarter. That definitely catches your attention.
It really does. Shows they can attract money, even when investors might be feeling a bit cautious.
So that begs the question, where is all this growth coming from? Let's dig into that a bit.
Okay. Well, a huge driver is definitely those net inflows we just mentioned. New money coming in.
Right. How much for the full year?
For all of FY25, total net inflows hit 12,617 crores.
12,600 crores. And how does that compare?
That's a massive 76% jump compared to the net inflows they got in FY24. 76% growth in new money.
Wow. Okay. And where are clients putting that money? Any specific trends?
Yeah, interesting shift there. Equity mutual fund inflows are really strong, up 67% year on year to over 7,700 crores.
So more money going into equities.
Seems like it. The share of equity mutual funds in their total AUM actually ticked up. It went from 51% in March 2024 to 53% in March 2025.
Interesting. Shows maybe a growing risk appetite or at least confidence in equities among their client base.
Could be. And aligns with their focus on high net worth individuals, the H&Is.
Right. That's their core market. How's that segment doing?
Growing well. The number of active client families in their main private wealth division went up by 18% year on year.
How many families is that now?
Just over 11,700. 11,732 to be precise.
And they need people to manage these relationships, right? Relationship managers or RMs.
Absolutely. They've been hiring there too. Added 48 new RMs during the year.
bringing the total to?
380 RMs now, supporting that client and AUM growth.
Okay, so new clients are coming in. What about getting more business from existing clients? Increasing that wallet share.
Good point. They mentioned that too. An upward shift is how they termed it. More clients moving into higher AUM brackets, specifically above the 5 crore mark.
So existing clients are trusting them with more money over time.
Exactly. It suggests they're deepening those relationships.
Which probably explains why their client attrition is so low. What was that number again?
Yeah, remarkably low. Measured by AUM loss from departing clients, it was just 0.52% for FY25.
0.5%. That's tiny. Really speaks to client loyalty, doesn't it?
It really does. Suggests clients are happy with the service, the performance, or likely both. Building strong trust.
Okay, so that's the main private wealth business. What about their other ventures, the subsidiaries?
They're contributing too. Digital Wealth, their online platform. Revenue there jumped 19% year on year to about 29 crores.
And the AUM in digital wealth.
That also grew, up 17% to around 1,800 crores.
Okay. And the other one, OFA, Omni Financial Advisors.
Right, the platform for other financial advisors. That saw growth too. Revenue up 14% to nearly 8 crores.
And more advisors using it?
Yep. The subscriber base grew to over 6,400, so steady progress there as well.
So if we summarize the growth strategy, it seems multi-pronged.
Definitely. They laid out 4 main sources, basically.
First is just investment returns, right? Market goes up or their picks do well, AUM grows.
Simple enough. The second, as we discussed, is getting a bigger share of existing clients' assets, that wallet share growth.
Third is bringing in completely new client families. And they added, what, over 1,800 last year?
Yeah, 1,821 new families. Significant number.
And the fourth driver?
Adding more relationship managers. Those 48 new RMs expand their capacity to reach and serve clients, plus potentially entering new cities, though they didn't highlight any specific new city entries for FY25 in this report.
Right, so it's performance, existing clients, new clients, and expanding reach. Pretty comprehensive approach.
Covers all the bases, really.
Okay, shifting gears a bit, what about shareholders? How are they being rewarded for this strong performance?
They've been active on that front. They announced a final dividend for FY25.
How much?
It's €7 per share. But important note here, they did a bonus issue.
Ah, right, a 1.1 bonus.
Exactly. So that 7 dividend is effectively €14 per share on the pre-bonus holding.
Got it. So adding that to any interim dividends.
The total dividend for FY25 works out to €3 per share, adjusting for that bonus issue. Obviously, the final dividend needs shareholder approval still.
Standard procedure. What else for shareholders? Buyback.
Yes, they completed a share buyback during the year, spent 165 crores on that before costs and taxes.
So dividend, buyback, and the bonus shares themselves. Decent return focus.
Be fair to say.
All right, looking ahead then, what are their plans? Any expansion signals?
They mentioned setting up a new representative office in Bahrain.
Bahrain, okay, expanding in the Middle East?
Looks like it. They already have an office in Dubai, so this builds on that presence. Of course, it's subject to regulatory approvals over there.
And they're still in, what, 17 cities in India?
Yes, 17 Indian cities plus Dubai. And they've previously mentioned plans for London too, though no update on that specifically here.
Okay, expansion is on the cards. Did they give any targets for next year, FY26?
They did. Pretty specific guidance, actually.
Let's hear it. Revenue.
Aiming for 1,175 crores in revenue for FY26.
Okay, up from 981 crores this year. And profit.
PAT.
Targeting 375 crores in PAT.
Up from 301 crores. And the big one, AUM. The big target is 1,000 crores. In assets under management. 1 lakh crore.
Wow, okay. Hitting the 1 lakh crore mark. That's a significant jump from the current 77,000 crores. Ambitious.
Very. Shows a lot of confidence in their growth engine continuing.
And they seem positive about the overall market opportunity in India, too.
Definitely. They highlighted that the penetration of professionally managed wealth in India is still pretty low compared to global averages.
So lots of room to grow the whole pie, not just their slice.
Exactly. Plus, they noted the increasing interest among Indians in equity investments, which naturally fuels demand for wealth management services like theirs.
Makes sense. Okay, just a couple more things. Corporate governance, employee focus, anything stand out?
Yeah, they introduced a new employee stock option plan, an ESOP, for 2025.
Okay, how does that work?
They're planning to grant about 1.25 million stock options, which is roughly 1.5% of their current equity capital, to eligible employees.
At what price?
The exercise price won't be less than the face value, which is 5 per share now.
And vesting. How long do employees wait?
It vests over 1 to 5 years. Again, this needs shareholder approval, like the dividend.
Standard practice for ESOPs. Any management changes?
Yes, one significant promotion. Feroz Aziz has been appointed joint CEO, recognizes his contribution.
Okay. And finally, the auditors. Any red flags in the financials?
No, seemed all clear. The statutory auditors, KKC and Associates LLP, gave an unmodified opinion.
Which basically means?
It's a clean bill of health. Means the financial statements give a true and fair view. No major issues flagged.
Good to know. Okay, so let's try and wrap this up for everyone listening. Key takeaways.
Right, so summarizing. Anand Rathi Wealth had a really strong FY25, good profit, good revenue growth.
And that huge AUM jump, right? Driven by those massive net inflows, especially into equities.
Yep, and a clear, successful focus on that H&I segment, keeping clients happy, that low attrition rate, and getting more of their business.
Plus the rewarding shareholders with dividends, buybacks, bonus shares.
And they have ambitious plans for the future expansion, hitting that 1 lakh crore AUM target in FY26, all backed by a positive view of the Indian market potential.
So hopefully this gives you, our listener, a much sharper picture of Anand Rathi Wealth's health and direction. You know, the essential story without needing to read hundreds of pages of reports.
Exactly the goal, the quick, clear understanding.
Oh, and maybe a final thought to leave everyone with. Given this track record, given these ambitious FY26 targets, how much will the bigger picture, India's economy, how investor attitudes keep changing, how much will that affect whether they actually hit these goals? It's a competitive space.
That's the million-dollar question, isn't it? Or maybe the 1 lakh crore question in this case. Definitely something to think about and maybe even track as the next year unfolds.